Well, the big story from Deal Street, Singapore-based private equity giant Temasek has agreed to buy 59% stake in Manipal Hospitals, valuing it at $5 billion. This is the largest private equity deal in the Indian healthcare space. In fact, private equity players have flocked to the sector with several $billion in deals being inked in the last few years. Advent, GIC, TPG, Shanghai, Fortune and several other PE players will now have a sizable presence in India's healthcare industry. So what makes healthcare so attractive for investors? Ekta is here with the numbers. Ekta.
Thanks for that. Well, in what is one of the largest deals which have taken place in a pan-India hospital company, Singapore-based PE fund Temasek is buying controlling stake in India's second largest hospital chain, Manipal Hospitals, for over $2 billion. Temasek already owns 18% stake in the hospital and will be buying an additional 41% from promoters and others for around 16,400 crores. Manipal, with a bed count of around 8,300 and 29 hospitals in 16 cities, is India's second largest pan-India player after Apollo Hospitals. The company, which is looking to ramp up its bed count around 10,500 in 2 years, has seen revenues more than double to around 4,000 crores and margins expand to around 24% in FY22, valuing the deal at around 10 times FY22 sales. Now, talking about valuations, in the past 5 years, valuations have risen as much as 8x in the hospital space. 2018, for example, saw two pan-Indian hospital companies sell stake, Fortis and Max Health. Fortis, interestingly, which was once bid for by Manipal and sold to IHH, another non-Indian promoter, for a valuation of around 13,000 crores, currently has a market cap which is almost 50% higher. In the same year, KKR picked up majority stake in Max Health for a valuation of just around 4,265 crores. The current market cap is over 42,000 crores. KKR also exited Max with a 5x gain last year. Valuations for Indian hospitals, experts say, really pivoted during COVID-19, which benefited, for example, from better improved long-term structural drivers such as better medical awareness, insurance penetration post the pandemic, and medical tourism reverting back to normal. And Manipal's valuations have just about almost doubled in the past 2 years, is a good indication of this interest. In 2021, National Investment Infra Fund, or NIIF, invested around 2,100 crores for around 8 to 9% stake in the company, valuing it at around 25 to 26,000 crores, which has now almost doubled to around 40,000 odd crores. And this is reflected in hospital stocks too, which have risen anywhere between 25 to even close to 100% since the start of FY22. However, while hospital stocks have risen and valuations have expanded, based on the 10 times FY22 market cap to sales valuation ascribed to the Manipal Temasek deal, a quick comparative check indicates there might just be room for further up move for a few of the current listed hospitals. Lastly, this deal also points to a trend of PE funds doing control deals in the Indian healthcare space. Besides KKR Max, the other recent examples include the Ontario Teachers, Sterling Hospitals Upward PE, and the Samara Marengo platform as well.
Ekta, many thanks for joining us and thanks for wrapping up all of those numbers so comprehensively. Meanwhile, Ranjan Pai of Manipal Hospital spoke with CNBC-TV18 about the Temasek deal. He said that they sold stake to Temasek in order to pare down debt of the holding company and will now hold 30% after the transaction. He also added that Manipal Hospitals will not be selling further stake in the hospital business as of now. The Adani Group has hit out at a report on its reliance on offshore funding. The group called a report by the Financial Times a mendacious attempt to show the conglomerate in poor light. In an exchange filing, Adani Group has called the media report